For those of you not familiar with the PRI, just a very quick introduction. We represent the responsible investment community with more than 3,000 global signatories to our 6 principles, who collectively represent over 100 trillion US in assets under management. Now, the PRI was formed in 2006 out of the UN system by a small but committed group of 86 asset owners, aiming to bring sustainability to capital markets. And in many ways, the history of the PRI is the history of the growth of responsible investment and its move into the mainstream. Progress in those early years, though incredibly important, was also painstakingly slow. However, over the past decade, but particularly in the past 5 years, we've seen a shift, with a significant acceleration in the uptake of ESG investing and both a mainstreaming and a maturing of responsible investment philosophies and practices. While there is clearly still much more to be done, today for the first time we're beginning to be able to see a widening of our focus and a widening of our thinking on sustainability. The sector is maturing and we're entering what I call responsible investment 2.0, or some might call 3.0, where investors are really beginning to start shifting their thinking from a pure risk and return standpoint, what do ESG risks mean for my portfolio, to thinking about the investor's role in driving real world outcomes, and to thinking about what risk does my portfolio have on the real world, the world in which we all live, and the world in which, of course, many members of our pension funds want to retire. And this change in thinking, while subtle for some, requires a different way of approaching and implementing responsible investment. This change in thinking obviously spills over into the corporate world as investors integrate sustainability into their investment processes and the companies that they invest in. So responsible investment, responsible business, business with purpose. And the business of the future will take a much more stakeholder focused approach. These days of business solely focused on maximising profits for shareholders are gone. It's clear to me that those who don't make this change, who don't embed sustainability in their strategies, will be left behind. Now, undoubtedly, this trend was already underway. However, the COVID-19 crisis has really accelerated this progress in a significant way. The world has now woken up and is finally beginning to understand the real importance of sustainability and the interconnectedness of issues, that the foundations of a healthy economy at their core must have healthy people and a healthy planet. And markets are responding, and they're really beginning to understand this. According to Morningstar, in the first half of this year, net inflows into ESG funds in the US reached 21 billion, nearly reaching the total amount for the entirety of last year. The pandemic has served for many as a first real proof point on sustainability, that it's not all about giving up returns for social good. And now, in the face of this crisis, the facts are proving the resiliency of sustainable investing. According to BlackRock data, 88% of sustainable indices outperformed their non-sustainable counterparts from the first quarter of this year. And at the PRI, we did a survey of our own signatories, and just over half of the respondents indicated that they had engaged with companies on COVID-19 related issues during the past AGM season, while 63% said they had plans to engage with companies on pandemic related issues post the AGM season. It's clear from our survey that investors don't just see these challenges as a flash in the pan issue. Over half of them anticipate that their routine engagements will be affected for the next 2 to 3 years. Now, early in the crisis, I kept hearing from many people that they feared ESG issues would fall to the wayside as investors in corporates struggle to stay afloat, focusing their efforts on dealing with the immediate concerns and dealing with crisis management. However, we've seen that investors and corporates can, of course, walk and chew gum at the same time. And at the PRI, we've actually never seen our signatories more engaged in ESG issues, and we're witnessing record levels of take-up on sustainability strategies. So perhaps if there's one little silver lining in all of this tragedy, it's the significant boost it's given sustainability and the opportunity that it's provided to leverage the crisis to build back better. Taking all of this into account, the state of play in the world and the stage we're at implementing responsible investment, the PRI is really seeking to further develop and drive home some emerging trends, some of the emerging trends that we're seeing about sustainability now. So therefore, we've got a number of key components to our next 5-year strategy that we want to use to really drive forward some of these trends. And I just want to spend a few minutes talking you through some of them. So the first two tie in very closely together. So namely, they're driving real world outcomes, which I already touched on, which are in line with and help us achieve the Sustainable Development Goals. And as we look to the recovery from COVID-19 and the drive to build back better, I think the SDGs have never really been more important. I like to think of the SDGs as like the world's business plan, the North Star. So to address the recovery, to me, we don't need governments to create more plans. What we need is for them to implement and to fund the one that we have. And this will assist us in addressing the urgent issues that have been further highlighted by COVID-19: inequality, labour rights, environmental issues, health and social inclusion. So I was really fortunate to be at the UN in New York for the launch of the Sustainable Development Goals. But nearly 5 years on, our time is really running out to achieve them. UNCTAD estimates the funding required for the SDGs is between 5 and 7 trillion per year, and that's from the private sector alone. Governments, of course, cannot fund the SDGs by themselves, nor the COVID-19 response. So against this backdrop of urgency for the private sector, there comes an opportunity. With tens and trillions of dollars in stimulus packages being rolled out, now is the time that we really need to accelerate progress against the SDGs. And investors have a key role to play in this. Many investors think about how ESG risks impact their portfolio. But as I said earlier, some are now starting to think in much more detail about how their portfolios impact the real world. And they're adding a third dimension. So it's risk, return, outcomes. At the PRI, we really believe investors' leverage enables them to shape outcomes in the real world, both in terms of increasing positive outcomes, but also importantly, in decreasing negative ones. So to help investors that are seeking to shape outcomes in line with the SDGs, we've recently launched our Investing with SDG Outcomes paper, and it focuses on 5 steps for investors. We've also launched some work with Freshfields, a global law firm, and it's a new step in our fiduciary duty work. And it focuses on the law and how it either enables or detracts investors from being able to prioritise sustainability outcomes. So how do we maximise positive investment outcomes from a sustainability point of view and minimise negative outcomes? And of course, the law needs to keep up with trends in investing. If we think back 5 years ago, we didn't have the Paris Agreement. We didn't have the SDGs. But investors are being asked to play their role in meeting the Paris Agreement, in funding the SDGs. But to do this, we need to think differently, but we also need the tools, the data, the regulation, and the policy. And really our aim at the PRI is to bring all of these pieces together to take sustainability to the next level. Another area that we're focusing heavily on in our 5-year plan is around improving sustainability data. So we are really looking how to drive meaningful data and data which better enables responsible investment. Again, this is going on beyond thinking about risk and return data, looking at end-to-end data that seeks to measure outcomes as well. And we've recently announced an important new partnership between the PRI and the World Business Council to drive joint corporate investor action on sustainable development. And through this partnership, we'll really work on how do we make sure that we get decision useful sustainability data. And we're also going to work on aligning incentives in the market, things such as remuneration. If we incentivize people to do things on the short term, then that's what they'll do. So we need to change some of the incentives in the market. In addition, at the PRI, we're also aligning our own reporting framework accordingly. So everyone who's a signatory to the PRI has to report on an annual basis, but it's really in the past been all about process and policy. We're adding a plus component, a component where you can think about the outcomes of your investing and how that does impact the real world. Then the other thing we're doing is trying to really elevate social issues, particularly human rights. So in the past, within our signatory base, social issues have often been treated by investors, but by corporates and governments alike. It's a bit of the poor cousin, squeezed between the E and the G. Now, fortunately, I think this is beginning to change. Interest in social issues, particularly human rights, has really grown significantly over the past few years. Institutional investors, of course, have a responsibility to respect human rights, and this is defined in international human rights standards. It was formally and unanimously endorsed by the UN in 2011, and it's been immediately reflected in OECD standards. However, at the PRI, although we have a core group of signatories who are doing this really well and are really engaged on human rights issues, it's not the norm and it doesn't represent the bulk of our signatory base. So we're still really a long way until we see all institutional investors who are really clear and are fulfilling their responsibility on human rights. And so we want to seize the opportunity and momentum that COVID-19 has given us. It's given us a spotlight on human rights. It's given us a spotlight on human rights. And we're trying to really embed them into the work that we're doing. And we're implementing a new 5-year plan. We're also starting to focus more on the whole issue of stewardship. Last year, we launched our Active Ownership 2.0 program, focusing on how we think stewardship needs to evolve. It's an aspirational standard or an improved stewardship standard, which builds on existing practice and expertise, but it explicitly prioritises the seeking of outcomes over process and activity and common goals and efforts over narrow interests. So something like Climate Action 100 Plus that PRI is involved in is a great example of what I'm talking about. It's focused on environmental issues. It involves 500 investors who represent 47 trillion in assets under management. All of these investors trying to deal with an issue in the same way, with the same ask, and it's having fantastic results. So we've recently seen net zero commitments across entire operations from organisations like Shell, BP and Total. And this is all off the back of investors using their leverage and engaging with corporations. But of course, we need to see more than just investors pushing corporates. They also need to commit to net zero targets themselves across their entire portfolio. And with UNEP-FI, we recently launched the UN Net Zero Asset Owner Alliance, and we now have 30 asset owners who have made this commitment. And finally, we're also looking about the whole issue of accountability and increasing minimum standards. I mentioned the fact that all signatories to the PRI have to report. We roll out our new reporting framework in January. And that reporting framework, while it will be streamlined, will also mean that it's much more difficult for our signatories to get the highest scores. We'll also lift next year our minimum requirements, the minimum requirements that it means to be a signatory to the PRI. So to conclude, ESG and responsible investing are really accelerating, but to make a real impact, we really have to harness this momentum and the recovery from the pandemic to push forward, to push sustainability forward. So over the next 3 to 5 years at the PRI, we're going to be working to move to an outcomes focus in line with the SDGs. We want to improve sustainability data. We want to elevate human rights, and we want to increase the ambition of investor stewardship. And of course, we want to increase accountability. And I really look forward to working with many of you as we take these issues forward. So thank you. It was great to be here with you today, and I'll now hand over to Hassan.
Thank you so much, Fiona, for the great discussion. It's so amazing to see how PRI has developed over the years. And I'm also thrilled really to see the developments and all the new initiatives that you just talked about, the encouraging doing business with purpose and impact. So congratulations and way to go. SEDCO Capital is actually a PRI signatory, and I was honored to sign the Principles of Responsible Investing in the presence of Fiona in 2014. And since then, we have been the first Sharia compliant asset manager and the first Saudi company to be the signatory of the responsible investing. I will be covering the discussion points with my colleague, Samer Awakar, who's the CEO of SEDCO Capital. And basically, but let me start by just making a small introduction on SEDCO and also how we're doing some of the business. And why we actually entered and we signed into PRI. Now, SEDCO is a Sharia compliant investor. We stick to our sustainability and responsible investing. It was founded by late Sheikh Salim bin Mahfouz. Late Sheikh Salim actually is an amazing entrepreneur who started his business over 80 years ago. He's a self-made man and self-educated man through experience, perseverance, hard work. He's a visionary and a very loyal and sincere man with high moral values. And that has actually encouraged the Kingdom of Saudi Arabia to support him and guide him in doing the National Commercial Bank, which became the largest bank in the Middle East over the years. His family, who are now the shareholders of SEDCO Group, follow exactly the same traits and the same footsteps. Therefore, in SEDCO Holding, we ensure that we follow that path. So today we are a fully compliant Sharia investor, and basically we invest into sustainable sectors that are important to our community, to society, and to the country in healthcare, in education, in agriculture, in technology, and in hospitality. So we also invest in some other areas, but we thought these were the most important areas. We adhere to best practices of governance, and we also are very careful in investing in social advancement and empowerment programs. Programs like Riyali, which is a financial literacy program that helps financial inclusion for the society. So far, there has been 1.2 million beneficiaries to that program. Okay, so basically today, all of SEDCO's products, as I said, follow responsible investing approaches and also follow Sharia approaches. For us, responsible investing, environmental, social, and governmental aspects are an integral part of our activities. And we aim to be a prudent investor who avoids undue risks. Okay. We will also refer later, you'll find me discussing PEI, the prudent ethical investing, which is really the bridge between Sharia investing and ESG and PRI. But let me first tell you how we really became a signatory. We have been really reviewing the story of responsible investing for a while, and then ESG, and we see all these terminologies, impact investing, green finance, and so on. And we were very attracted, and we saw a lot of similarities of that to Sharia investing. Later on, we actually went and met with the PRI officials to understand more their principles and the way they do business. And we were very happily impressed with what they're doing. We found that the principles are very much aligned with the way we do business, with the Sharia principles, and with the way SEDCO likes to do business. And we saw that there are great areas that we can learn from PRI, especially when we're going deeper into the principles and the alignment of ESG. And accordingly, we were able to change some of our processes to meet these requirements. So in 2012, we were looking at basically the ESG, PRI, we were looking at impact investing and all these new ways, good ways of doing business. And we decided to visit the PRI officials in London, went through the principles, the way they do the business, and there was a lot to learn, especially in the processes that we could add to our existing process and in improving the ESG side and the engagement side, because there's a lot of positive engagement that is required by PRI in the companies that you're investing. So also we thought that our approach to business, the Sharia approach, which is mainly driven, besides avoiding the sin sectors and other areas, is the prudence part and the low leverage and avoidance of excessive leverage, the structures of financing that are backed by assets and clear cash flows. We thought that's a great addition. And with it, we were encouraged to become a signatory and start really getting involved in this. And we created our first fund early in 2014 on our Luxembourg platform. Later on, all our funds followed the same principles. So now, of course, being a Sharia investor has a lot of benefits, but also it has a lot of guidelines. So for us, when we had to sign into PRI and become very committed to ESG and added items to our processes, we were really not starting from zero, because this already existed in Sharia investing, or a lot of it existed. And it was only additional filters that we could add and new ways that we could add of doing business that will enhance our business, besides the reporting part that Samer will also talk about later. Now, going to PEI, we thought, let's create this bridge. How can we create the bridge between ESG, responsible investing, sustainable investing, and Sharia investing? And mind you, that all of them really guide towards sustainable economies, sustainability for future generations, which is extremely important. I mean, that's what we're all worried about. We want sustainability for future generations. We want to have safe societies that are able to grow through healthy economies that can benefit the children and future generations across the board. Now, we looked at that and we said, okay, fine, now we became signatories. What do we do with that? And we started talking to some of the asset managers that we use, some of the investments that we do. And we started, for example, with the timber. So, okay, how will it impact our timber investments? Talking to the timber asset manager who does business in Chile, in Brazil, in Australia, and some other places, we told them, look, this was always in the Sharia guidelines, but now we're a little bit more specific about what we want. We can invest with you and we want you to continue investing in timber. However, we want to make sure that the forests that you're harvesting for the timber will remain forests, even if we sell it in 10 years, 20 years, whatever, because you're going to continue planting trees and growing trees in such a way that it will be fast enough to ensure sustainability. Two, we don't want you to impact the ethnic groups. So if there are ethnic groups living in these areas, we want to make sure that they're treated appropriately and fairly. We don't want our forestry business to drive them out or to affect their life. We don't want you to destroy the rivers because, you know, the logs for the timber gets transported in the rivers, and many times these logs log the rivers and they hurt the streams and the flow of water, and sometimes even pollute the water. So, and finally and happily, and that's where I come to the circle of influence, they came back and they said, look, our board loves it, and we commit not only that your investment is going to be driven that way, but also we want to become signatories, and we want the whole fund to commit to these criteria, not only that $50 million that you're giving us. So that was an amazing impact. Of course, that was a large fund. It was $1 billion fund, and that's how it's driven. Similarly, when we talk about real estate, for example, real estate, you want to be careful about the building codes. You want to make sure there is proper electricity efficiency, power efficiency, water conservation, waste management. All of that, you want to make sure that it is in the building that you're buying. You don't want to go full green, although we've done that in the past. We've developed one property in Bangalore, and it was fully green property. It was fantastic. It has zero loss of water, so the water gets recycled and reused and recycled and reused until it's used for the trees around the building. Similarly, electricity, we had 70% better efficiency than any other building in Bangalore itself. However, now we're talking about, let's say, going to the cities, and you'll find the municipalities are going and growing in that area in such a way that they're requiring better levels of efficiency. So if you're encouraging that, either by investing in properties that abide by that and encourage that, or building material factories that are producing the new insulation, the better windows, the tighter doors, or so that will really help everyone. And by the way, it helps you too. Guess why? Because going forward, the buyers of the real estate, they always want to make sure that the properties they are buying really is well taken care of, that because they know that 10 years down the road or 20 years down the road, the municipality or the government are going to have new building codes requesting higher levels of abidement of that. What's great and very encouraging is that we see the young generation really so attached to all those new levels of sustainability and responsibility. And this is great. I mean, because hopefully we'll have a better world with them coming along, running it in the future. So going back to PEI, we talked about the bridge, and we talked about sharia, and where we see that prudence and avoidance of excessive leverage and the healthy balance sheets have created value, but also there are certain difficulties that you see there. It is a smaller universe, obviously, but at the same time you're avoiding sin sectors. Well, sin sectors have outperformed, but it's okay. We're committed. We will walk the talk. So we're not going to invest in sin sectors because they perform better. Nevertheless, you'll find that that bridge and that combination of Sharia, because of the low leverage, because of the balance sheet parameters, we have created a lot of alpha, great value. And frankly, if you want to compare the Dow Jones Islamic total return to the MSCI World, so the Dow Jones Islamic is the Islamic, and the MSCI World total return is the global indices, you'll find an amazing alpha. So there's a good alpha between MSCI World and ESG. ESG performs better on a 1 year, 3 years, and 5 years index, okay? And when you add to that parameter the Dow Jones Islamic, you'll find even a much greater variance. And the reason for that is, if you have noticed during the past few years, highly leveraged companies are the companies that got hurt during crisis. Anytime we had the crisis, there was this harmful, and some companies would not continue. Also, the financial sector, including insurance companies, were affected by the global meltdowns during the past few years. I think with that, if you allow me, I will pass to my colleague Samer, who will talk more about the implementation and reporting and other interesting things that they're doing at SEDCO Capital. Thank you very much.
Thank you, Hassan, for the introduction, and good afternoon, everyone. I'm honored to be here today at this year's Ethical Finance Conference. Before I begin, I would like to take this opportunity to thank the organizers at the Global Ethical and Finance Initiative for giving SEDCO Capital an opportunity to be part of this esteemed event. I'll start by giving a quick overview about SEDCO Capital. I will then dive into our proprietary prudent ethical investment approach and share some examples and learnings we have gained over the years. SEDCO Capital is a Sharia compliant and ethically led global multi-asset investment manager with over $5 billion in assets under management. We were established back in 2010 as an independent asset management firm, yet our investment track record, expertise, actually rooted back to 1976, being part of the SEDCO family group. Even prior to becoming a signatory to the UN PRI in 2014, we have been embracing the goals and objectives of responsible investments from the early days of our business. As we come from a Sharia compliant background, the universe of Sharia compliant investments